And let's go. Bulls. We're gonna actually do the Bulls versus Bears, the weekly Forex forecast. And okay. Okay, welcome. Happy Friday to you. Hello to the VIPs and the people on our school network, as well as those who are in Pip and Run, our Forex mentorship on Elite Traders University. My name is Dr. Greg McLeod. It's so good to be with you here. And we are going to have coffee hour with me. I've actually already had my coffee, and so I don't need another cup. So I'm going to be already pretty amped already. Hope you are enjoying your hot cup of Java and as we look at the markets and what's going on in the market. So let's go ahead and take a quick gander here. If we get, looking for my slides. Slides are slides are on strike right now. It's Friday. Why are we here? This is because okay. And we go view, reading view, and let's get to it. Share screen. How about the portion of screen? Share sounds and go. Okay. All right. Welcome to Elite Traders University presentation of Bulls versus Bears, the weekly Forex forecast, which is going to be part of coffee hour. Figure we're going to go ahead and do this and give people a rundown. As we get more people that have questions and things like that, we'll go ahead and open up the Q&A afterwards. But we're going to talk about my long-term and short-term outlook on various currency pairs and financial instruments. Here's a risk disclosure on your screen to make sure you understand all the risks associated with foreign exchange trading. And I've been doing this for over 30 years, founder of Elite Traders University. I trade options, futures, stocks, forex, and crypto. And I spent close to 10 years as a currency analyst at the world's largest forex brokerage and was a trader coach. And I graduated from UCLA, one of the top 20 public universities in the United States. And I have the lifetime teaching credential from the state of California, published author, articles, creator of the Pip and Run strategy. And so letting you know that I'm not some young kid with a ring light in a basement, but I am a former Wall Street professional, and I come to serve and help. My goal is to help traders become professional traders in 90 days or less using my unique approach. Okay, let's get to it. The Gold Rush Blueprint is a book I wrote, and I guess the promotion is still on there. I don't know if it's still available. We did take it down, but when gold was like $1,900, I said it was going to go up to like close to 5,000, and we're almost there. So um, there you go. If you're interested in the Gold Rush Blueprint, just DM me that, and we'll see if we can get you connected with that. Okay, so our agenda, we're going to talk about the US dollar index, the euro, the pound, the Aussie dollar, dollar yen, dollar CAD, the gold, silver, oil, S&P 500, economic news and world news. We'll try to get through as much as we can within our hour. I do have to be actually a half hour because I actually have an appointment at 9:30, so I'll be cutting it kind of close. Okay, so let's get to it. Go to school. If you're not on the school community, you can join the school, gain early access to the most proven Forex scalping system there. You can use our QR code to join the school. We have videos, we have lessons, we have a community on the SKOOL network. Okay, and let's get to it. Let's start with our uh, not that. Not that either. Let's get into our. We're gonna go to my market heat map, the arrangement of currency pairs by percentage change, and we're trying to get. There we go. My market heat map. Okay, we'll start there. I start there with my analysis for everything. My market heat map is a trade scanner, and basically it tells me what direction the market's going. Green is up, red's down, gray stay away. You can gain free access to it. Just come to the webpage, mymarketheatmap.com, and scroll down, and you'll have one of 6 powerful heat maps. This heat map is the Forex majors. You can see that the euro is up, right? It's green, it's up, it's at the top of the heat map. At the bottom of the heat map is Kiwi dollar. It's trending down. And gray, stay away, means that currencies are moving sideways and not really giving us much action. So we want to focus in on the extremes of red and the extremes of green. And we have other heat maps for commodities, for other things as well. But we're going to use also another free tool, absolutely free, because go to mymarketmap.com, we have the economic calendar. The economic calendar is what I use to actually drive um, the market, what I'm looking for, right? So we can see, all right, I don't see the heat map, okay? I am sharing my screen. You might have to reduce some refreshing. Yeah, yeah, I'm showing that it is, it, yeah, try refreshing. Thanks, though. Okay, so we're gonna move on to the economic calendar, and let's go ahead and the next week, this week, actually, we should have had non-farm payroll, right? Friday, the first Friday of every month is not non-farm payroll. Well, guess what? We didn't have non-farm payroll, so we were really dependent on the ADP number. Um, yeah, employment change out of Canada, no employment change here because of the government shutdown. We did not have the one of the most important economic indicators, right? So if the shutdown continues, we probably won't have any economic data, and that's going to make it a lot easier to actually look at, right? So I have this filtered out to high impact items, and then that way I can screen out some of these other countries. I'd love to visit them, but their economic numbers don't really mean anything to me as a trader. So we're going to start November 11th, which is my daughter's birthday, and I believe it's going to be Veterans Day. We're going to have UK data. We're going to have the claimant count change. Previous number is 25.8. We're looking for a drop to 20.3. Could be weaker for the British pound. Unemployment rate also looking at to rise from 4.8 to 4.9%, right? And then we have the German data out, which is part Germany. Germany is one of the largest economies in the Eurozone. The EW Economic Sentiment Index supposed to rise from 39.3 to 42.5. Could be bullish for the euro. And if you're trading the euro against the euro might be a stronger currency versus the pound if you're trading the euro pound currency pair. Wednesday, November 12th, we have more European data. Look, we have no US data because of the government shutdown. We don't have the access to the data. And guess what? The Fed does not have access to data in order to raise or lower interest rates, right? So we have a speech from one of the members there. Aussie, we're going to have lots of Australian data. So the Australian dollar will be in play on Wednesday. So I'm not really concerned. As you know, I'm not big into fundamentals, right? All I know is that when these are released, like the crop report in trading places, they cause the market to move and create volatility. Volatility is what we trade, okay? So I don't care if it rises or falls or better than expected. I don't really, I just basically got to fill some space here. But to let you know that these are items that we will look at, and they're all going to be released at roughly about 7:30 Eastern time, right? Lots of employment data out of Australia. If that information, if these numbers are greater than expected, we usually expect a directional move, right? Or if they come in as expected, or maybe the Aussie dollar won't move at all, right? But just know that at this time, because what we need as a trader, we need to know time when something's going to happen, right? If we're a short-term day trader, okay, if you're a swing trader, a position trader, you don't care about this stuff, right? I mean, you do care a little bit, but you're placing trades that are lasting multiple days. The blip of a one and that's going to happen in a couple of hours on one day is not going to impact your trade. However, if you're a scalper, day trader like I am, and like my students are, we do look at this and we want to see, um, you know, it allows us to get involved in the market at 7:30 Eastern time, right? And so we're not getting here at 6, we're not getting here at 10, or we're not getting here at 11. We have a specific time to look at the market, maybe 30 minutes before, maybe 30 minutes after, right? But we have a specific window of time to trade one currency. This is very powerful intel to know what to trade and when to trade it. Okay. We have two big pieces of the puzzle, right? And so now we can use our technical analysis, we can use a system, whether you use moving averages or oscillators or whatever you use to determine trend direction. All you gotta do is you've already, because if you have all those tools and you don't know what you're trading, you could get a sando, just a just a in just a an empty hand here, right? So, but at least we know that there's going to be interest at this time, and now we can use our tools to mine or to harvest from this direction, to benefit from this direction, right? So that's why we're looking at this. So Wednesday, it's going to be Aussie day. I'm going to be looking at Aussie dollar, Aussie yen, Aussie Kiwi, Aussie Swiss, pound Aussie, Euro Aussie. The Aussie family will be moving on the heat map. Thursday, it's gonna be the pound, right? We're gonna have the UK data. We have growth rate preliminary supposed to drop from 1.4 to 1.3. GDP growth is supposed to drop from 0.3 to 0.2. GDP month on month is supposed to drop from 0.1 to 0, right? And GDP year on year is supposed to drop from 1.3 to 1.1%. So there we go. We've got a lot of data here going to impact the pound. So pound dollar, pound yen, pound Swiss. We can look at some charts to see how this will actually work. Impact. Usually the news goes counter trend for a certain amount of time, and then we use a news fade strategy in order to trade with that. Okay. Then look at this. I've never seen this before, right? November 13th, we have 8:30 question mark, question mark, question mark, question mark. What does that mean? Is because we usually get this data, core inflation rate out of the United States, but because of the shutdown, we might not get it. But if we get a deal over the weekend, right? Maybe they open up the government and then this data will be released. Okay. It's expected to be unchanged at 3%, right? And the inflation rate year on year supposed to rise from 3% to 3.1%. Inflation rate month on month. And actually good. They gave us the previous number in the forecast. 0.3% was the previous month on month. It's supposed to drop to 0.2%. And core inflation is supposed to rise from 0.2 to 0.3. Okay. Anyway, inflation is one of the biggest numbers, other than non-farm payroll, is inflation, because the Fed will set interest rates based on inflation. If inflation is high, they'll raise rates or keep rate, or they won't cut. And if inflation is down, then there's no reason to keep rates high. They can lower interest rates, which would lower the value of the dollar and cause other currencies to go up. So there's kind of a domino effect. If you pull one, something else will happen. You pull another one, another thing will happen, right? If then that. If then that, right? So just remember that inflation, high dollar, low inflation, low dollar, high dollar, low Kiwi, low pound, low New Zealand dollar, right? So that's the kind of thing that we go about teaching and talking about in Elite Traders University, and which forms the foundation and the core of the Pip and Run strategy. Okay, it's not just buy, breakout, blah blah blah. It's a holistic approach to the markets, looking at all aspects of market, whether it's sentiment, whether it's technical, and whether it's fundamental, right? Or quantitative. We use quantitative and qualitative analysis as well. Okay, and so we have a number of jobless claims, industrial production, a number of pieces of data, and we maybe they might throw non-farm payroll on there too, right? So lots of U.S. data is scheduled to come out on the 13th, which is Thursday. So that's gonna be a massive day. I would look at the euro and look at the maybe dollar CAD, dollar Swiss, dollar yen, be mostly impacted by this data if it comes out. Now, it's interesting what will happen if it doesn't come out. Usually, if there is no uh, fundamental data or economic releases, well, the currencies just behave to establish support and significant support and resistance levels, such as Fibonacci's or quarter lines or Fibonacci lines. Moving averages will act as guide for price if in the absence of fundamental economic releases. Okay. And we have Chinese data coming out too. Industrial production is supposed to drop from 6.5 to 5.6 as the tariffs probably hurting them. Retail sales year on year is supposed to drop from 3% to 2.7%. And even though we don't trade the Chinese currency, as I said before, we can use a proxy. We can use the Australian dollar and we can use the New Zealand dollar since they are close geographical proximity to China, and China is their largest trading partner. So any negative data, when China's economy catches the cold, then the Australian New Zealand economy catches COVID. Okay. Big dog gets sick, little dogs die. So we could see a dramatically weaker Australian dollar and Kiwi dollar if this Chinese data is weak. So we can trade the Chinese currency as a proxy, not directly, but trade it using the Australian dollar and the New Zealand dollar as proxies. Okay. Finally, on Friday, we have GDP growth rate year on year. Um, that's going to drop from 1.5 to 1.3%. And many people are calling for an ECB rate cut in order to keep from going into a recession, to stimulate growth, to stimulate purchases. When you lower interest rate, it puts more money into the economy. They're basically printing more money. When they lower interest rates, what they're doing is printing more money. Printing more money, making it more available. Loose monetary policy supposed to increase the amount of purchases and stimulate the economy, right? But, it can fuel inflation later on. But with inflation low, they have room to operate, a little wiggle room, right? So GDP growth rate is supposed to drop from 0.1, or actually rise from 0.1 to 0.2. That's a quarter on quarter, right? And then the US again, more question marks, right? Core PPI, producer price index, you might as well call it inflation, producer inflation. We have no previous number given. And okay, I am okay. 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 So again, we have retail sales, core PPI. PPI again is inflation, and we don't have any previous numbers because why? Because of we have the government shutdown, right? And with retail sales coming out as well. So all this, I would look to trade the euro as well. And seasonally, there's something called seasonals. I talked about technical analysis, I talked about sentiment analysis, and I mentioned fundamental analysis. But there's also seasonal analysis, which is a force tool that you really don't hear much about. Jake Bernstein is was very famous about talking about seasonals, seasonalities of currencies. And for years, the seasonals have been like for craps. They haven't been working. But now that we have more normalized economy, the seasonals are kind of back in favor. And so usually the euro, the pound, and the other currencies rally against the US dollar in the fourth quarter, right? And so this fourth quarter move, you know, what happens is that we often see a rise in the euro in the fourth quarter, right? And so that's basically what we have seen. We've seen this rise in the euro back to we've captured the 115 handle, dollar taking a dive, right? So let's go ahead and go over our currencies. And then a few minutes I have left because I just got my phone call and they are about 18 minutes away. Taking a delivery here. Okay. So let me get to the charts. So we'll start the dollar index. The US dollar index. The US dollar index is let's go ahead, super charts. Right. Okay. So here's the US dollar index. I'm going to actually start with well, we're going to remove all indicators and remove all indicators. And we'll go ahead to go to a single chart. Remove all indicators. Okay. All right. So we're going to start with our 50,000 foot overview. We'll start for our weekly charts. Right. And our weekly chart, we had the US dollar index bouncing off of a support area here at the 96.43 area. Right. And we've been making some headway to the north side. Right. So we do have this kind of counter trend move here. As Trump talks about tariffs and things, we start seeing the dollar gain a rebound after a decline. Big decline from January 13, 2025, all the way down to the lows of 96.08. We rose to this 96.75 area. Let's drop down to our daily chart, drop down to like our 10,000 foot view. And you can see that we did have a nice rally and an uptrend channel. Try to say that 10 times fast. Uptrend channel, right? So there we go. We got our uptrend channel, and we have 3 drives to a top. We've also topped out at an old high that we had back in July. And so this could be the top of a range box that we had from a low of 96.43 to a high of around 126. We're at the top of the range, and maybe we're going to start coming down from that range. And I suspect that we would continue to move down in in pretty good fashion there. If I'm trying to find an arrow, I'm looking for bulls versus bears here, right? And bulls versus bears, the dollar index, I am bearish the dollar index. We can drop down to a 4-hour chart, and we can see a retest down at the 96 area. Now, we don't trade the US dollar index specifically, so how do we get access to that? So what we want to do is go ahead and look at the euro. The euro is considered the anti-dollar. So let's go look at the anti-dollar. Let's go back up to that weekly chart again, go to the euro, and then take a look what's going on there, right? I'm going to remove all drawings. Okay, there we go. Now this is the weekly chart, and we've been in a kind of a down, intermediate term downtrend with a longer term bullish uptrend, right? We kind of broke that trend line. We're maybe finding some support here at that 115.40 area, right? We also have Fibonacci support coming in from the swing low of January 27th, 2025 to the high of 1.1934. That's the high that we had on September 8th. And we can see that we're pulling back to some Fibonacci areas, and we're seeing buyers stepping in at the 1.1521, 23% retracement. Maybe we test the 38% retracement, 112, maybe not. Buyers are stepping in by the long wicks. And so we'll probably look for a break of 116 for a shot back at 119. And as this nascent uptrend continues, right? We're still in an uptrend, and we do have overhead resistance coming in at the around the 122.67 area, the highs of 2021, and we could possibly hit that. I mean, if you take a fib projection, we definitely have some type of a possibility of getting the old high 119.70 looks at the 100% expansion, and then we could probably the next expansion target be 124.57, right? That's as long as we can hold these fibs and stay in this uptrend, that we have an uptrend channel, right? Really, if you can see the channel, don't change the channel there. We're at the top of that channel, so we might get a little pullback to the middle. This is like my makeshift Andrews pitchfork here, where we have maybe some type of take the middle of that channel, and we can see maybe price pulling back and then maybe extending higher. But it's still an uptrend channel. Looks bullish. Euro, bulls versus bears. We are awesome. Okay, great. let's go ahead and move on to our next thing. We want to take a look at the Australian New Zealand dollar. And I know we have some big news coming up this week. And to start with that weekly chart, and then we can see that we have been in this downtrend of, especially with the weaker China, weaker Aussie, right? Strong dollar and tariffs have been weighing heavily, but we are finding some support here in the 64.52 area, right? Like this could be some type of a head and shoulders pattern, which could break lower, right? We also have a competing intermediate uptrend as well, right? So I mean, it's really, and basically moving sideways. We haven't broken any new highs since September 15th. We haven't broken any new lows, in a while either. So we're still kind of stuck in this area, and so I'm kind of like neutral on this, neutral to long, but we're at the top of this bearish channel, so I'm actually bearish here. We can drop down to a daily chart, and you can see maybe we have some type of a descending triangle. We break the 64.38 area where we have a bunch of support there, and then we could, we could take a fib on that and look for some support areas, targets, right? 38% retracement, 64.04, and then 63.05. It could be the expansion down to that area, right? Okay, moving right along, let's go ahead and go to Kiwi dollar, right? So it should be about the same thing. Kiwi dollar is very weak weekly chart, but we're looking at possible support coming in on that at the 56.18 area that we tested back on October 17, 2022, and again on January 27, 2025, and April 7th as well. I don't know, 3 touches of tap, we're moving on down like George and Wheezy, and we have a lower, a high, a low, a lower high, and the bears are going to try to make a lower low, and that's on a weekly chart. I am bearish. The Kiwi dollar, looks like the bears are going to stay in control for the next few days. Okay, so bearish. Okay, let's go ahead and go to the Japanese yen. Go out to a weekly chart, do the same thing, and remove all the drawings there, and we can see that we have a nascent uptrend on the weekly, some higher highs and higher lows, but our longer term trend is also up as well. But we also have a descending trend line that we are engaging in right now, right? It's being challenged, right? And the price could get rejected here, but we do have a weekly uptrend, pretty steep uptrend though. Maybe it's a little overbought. We could see a pullback, there. Go to a daily chart, and we can see there's we could probably head lower, break that trend line, come down to 49.26. So I am actually kind of mixed on picture on this, maybe short-term bearish, medium-term bullish, right? But we're kind of trapped in this triangle of the Bermuda Triangle, the triangle of indecision here, right? If we can break out, we have a possibility to tag this old high from January 10th, 58.86. Okay, we can probably see that space and clear that. However, we break this line, we have support at 49.50, right? So I would look at this trend line as a possible, maybe that trend line gets broke. I mean, right, we have an intermediate trend line too within that too, if you can see that, right? But I'm basically I'm short-term bear. Okay, and you can see how this is getting kind of wonky here. Let's go to the dollar cat tier weekly chart, and we get these long wicks, and the pullbacks are just extreme. If we go back in time, we can see that we have this really jagged uptrend. I mean, I mean, they had it's overlapping, so yeah, when we get to the top of the channel, price usually comes back down, right? And we have a long wick there, right, on that weekly chart. And though it's an uptrend, it's an uptrend, with reduced momentum with that long wick. And so we look for a daily chart, and we see maybe we're topping out, and maybe looking for if we have our channel, we would be looking for prices at the top of the channel to come back down, a little mean reversion trade. I'm looking for a bearish on the Canadian dollar, right? Short-term bear. If we get back down into this area, we could probably see a bounce from the channel. So short-term bearish, and then medium term, we could see prices rally from that support and continue meandering its way up ever so violently. We do have some old resistance there that we are, we broke through. There's a gap down, and so there is space for it to run to 42.90 from the current levels, right? Okay, let's go ahead and move on to gold. There's gold in them there hills, right? And we did dollar yen, dollar CAD. Let's go to gold. And gold has been just on a monster tear. Look at that, this huge, huge, huge monster run, right? And we had the double top tweezer tops at the 43.90.55, which we reached around my birthday, about October 13th, October 20th, right? And so we see this, we're in a pullback, kind of a correction, and it's healthy for trends to take correction. You know, before they, once they finish correcting, we usually get some type of a trend, right? So we have this uptrend. However, we are correcting, and we're trapped in some type of a range. For the past 2 weeks, I mean, each bar represents 1 week of data. So we've basically gone nowhere for the past 2 weeks. So let's go ahead and drop to a daily chart. And, we're also flattening out. We haven't really pulled back farther. The lowest we got was 38.97 was the low. And we're trapped in a box between that 38 area and 4,000, right? So we're just trapped in that. So we need a break above 40.69 opens up the door to the old high. I'll retest of the high of 43.84, right? And if we take any type of a fib retracement from the low that we had for a wave 4 low to the high, then we're sitting right at the 38% retracement. So we're bouncing. So I'm bullish gold. Look for a retest there, and maybe even a move even higher to the. In fact, let's put on our put on our turban and our Zoltar, the fortune teller, and we can see that the 100% expansion is 51.40.41. I'm looking for a move of gold to the 5,000 area, and so I think we're at buy levels here. If you can buy and be a hodler and hold it, you'll be $1,000 richer. This is not a trade recommendation, just my educated guess, my 2 pips worth. Okay. And let's go ahead and go to the S&P 500, and I'm just going to go to the SPX 500, and it represents 500 companies, and some of those companies are also in the NASDAQ. So pretty much they're going to be about the same, right? So in quest of time, I'm at 9:33 right now, and I need to roll out. I'm really right. So we basically are testing support right now, and this is our weekly chart, right? And this is kind of bearish, where we have an inside day candle, right? We've had that before, and prices broke. So this is pretty interesting. We break below 66.23.94, the low of the doji, then then we would have well, we need a little bit of a correction, right? We need a little healthy correction. However, trying to short this market has been bad. Trying to be a hero, throw yourself on top of a landmine would probably or a grenade would probably be a lot better odds, right, of survival. So I would let's drop to a daily, right? See what's going on. Yeah, I mean, we've been pulling back for the last 6 days. 6 day pullback. Usually we get a break north. And seasonally, using seasonal analysis, seasonally, we've never had a bad November. So this probably represents some type of pullback buying opportunity, right? But I wouldn't touch this with a 10-foot pole unless we could break maybe 60, 6,800, right? Right. We're still pulling back, and we haven't we're at the 11% Fibo. The 23% Fibo is at 64.16. I'd split the difference and look for 65.52, right? But again, I want to see a bounce, right? So I'll split the difference between the two fibs and say, look, we get down to here and we break north. We have a shot back at 7,000. My prediction 7,000 by the end of the year. Okay. So that's S&P 500, and I'm going to use I'm going to a little time I have left. I'm going to go to oil, and we're going to go to what do we use? U.S. oil, West Tech. I'm going to use West Texas Intermediate. And let's go ahead and do that. Let's start with weekly chart. I mean, we've been stuck in this range for like forever. And usually I don't even talk about oil, except that we're at this double bottom here, right? And, we've been bottoming out at the 56 area since, no, again, October and then April and then April again. Weekly chart, right? Double bottom. Usually we get some type of a move back up. We look for a move back toward the back to the 77 area, and we're currently at 60.20. Let's look down to a daily chart, and then I'm actually short-term bullish, right? Short-term bullish. Okay. So I'm gonna get my bull there. Okay, looking for a break, but I want to see a break of the trend. I want to see a break of 62.33 to confirm, right? However, if we get below 59, but below the wicks at 55.41, I'd be bearish, right? And government slowdown, maybe slower economic activity going into the holidays, could, a colder winter could spike oil, or any type of the geopolitical risk has been taken completely out of oil with the whole Middle East situation that the president brought, a little stability there, taking out Iran, getting the hostages out of Gaza. Oil has just been, it's not good for oil, right? Good for us as consumers, because I could fill up my tank for $2.45 a gallon in the great state of Texas. Anyway, I want to thank you so much for being with me here for this special edition of Bulls versus Bears combined with coffee hour. I hope you found this helpful and useful. And if get some feedback, give me a thumbs up, a like. If you want more content like this, let me know and I'll bring it back. It's I really want to make sure that it's helping traders and helping you get a bird's eye view of what I'm looking at in the markets. This is the homework that I do for myself and for my clients. However, if you guys don't appreciate it because there's so much other stuff out there that's so much better than mine, then go for it. But anyway, I just do this as a service to you guys, absolutely free. And school, hey, you got 7-day free trial for school. And if you like it, keep it for $7 a month. If you don't like it, then feel free to cancel at any time. And if you want to trade live with me too, we can also talk about that. Can DM me and say, hey, I want to trade live with Greg, and I'll show you how that looks like. Okay. Thanks. John says your work is beyond good, bro. Thank you so much for the compliment. Love you, brother. Love you. Peace and pips.